Hey, Matt.
Hey, bud. Hey, bud.
I think you might have.
I think I got two of them up and down. Here we go.
Can't hear you, Mike.
There you go. Can you hear me now?
I can hear you. You hear me, Matt?
Yep.
Good.
I think I had two screens open at the same time. I was listening to myself echo. All righty.
Greg just sent me a picture of one of his Florida customer yards. It's pretty crazy. Like it's I guess a lot of rain down there.
Yeah, I saw a picture yesterday of a second-story house, and it just had the roof above the ground. It's like in Naples or south there. It was like the water was all the way up to the roof line of a second-story home.
Crazy.
Like 20 feet.
Hey, Matt.
Hey, Mike.
You accidentally sent the link to get into the studio to your users, so they're jumping into the studio.
Oh, man.
You might want to resend it and tell them to get the other link, which was the second email that I sent. we got people jumping into the studio here. I keep removing them, but we'll just take a quick second.
Too many participants.
Yeah.
Actually, one of the link you sent me for YouTube was a restream. Is that right?
No, so the restream link, that's just to get into the studio. That's not the one you should have forwarded out.
That's the one you sent me.
So
I just need to send the LinkedIn one, not a YouTube one.
The second one that I sent, that's a link to watch the shows on LinkedIn and YouTube.
Mm-hmm.
So if you could send that one out to your guys.
That one has Studio Restream on it for YouTube.
Oh shoot, it does. Oh my God, that was my mistake.
So the LinkedIn one should be fine. It's just the one trying to do YouTube.
Okay. All right. This is my first time doing this part, so I am going to have to let me reply to you.
Let me just tell them to use the LinkedIn stream and not the YouTube one.
Yeah, but if they don't have a LinkedIn account, I'll
actually, can't they just watch it on your LinkedIn page?
Here we go. Yeah, they could, but you know what? I got it fixed up here. All right, perfect. I'm going to send you a new one, Matt. That was a mess up.
Let me just go without it if you want to.
There you go, Matt. Sorry about that.
Quite all right.
I'm going to tell Paul, Kenny, and Justin, and they're going to get booted. Well, yeah, that was my my mistake. So they'll figure out pretty soon.
Give me just a minute here to get that email going.
And I'm going to get out of here.
We better have something profound to say.
Oh, hey, Matt, you know what? I'm sorry. I did not get your
I just sent it.
weekly
Good.
report. Are we going to just do the briefing today?
Yeah, so this is more current.
Okay. All right. I'll bring that up here.
Yeah.
There we go. Look at that. Except I got to get out of there.
All right.
Matt, how do you
Resend.
hear me? Okay? You hear me?
Yeah.
Okay. We'll wait for a couple people to stream in then.
They're just sending it. Good. Here comes my wife in the background.
What's that?
Here comes my wife in the background.
That's okay.
Hey, something I wanted to show that I added. Look on the second page. I got it on. I don't know if I got it on there or not, but it's,
Mike's going to have to hear us and move the second page.
make sure that's what I want to do before I say it. Yeah, the momentum change. That's something that I wanted to point out to people about direction, momentum. Actually, I got something different, but one of the things I'm going to be doing in the future is trying to change focus a little bit from so much on pricing to more the direction and the momentum.
Where is the momentum change?
On the second page, upper right-hand corner. You got a crappy copy, don't you?
Oh, there we go. All right.
I've added the direction and momentum column on there so it shows it better, but is that an endorsement?
There we go. How many people we got in so far? Somebody just typed on here, one would think futures would be limit up to start after a major hurricane in Florida. Down today, which is a scary fact.
Absolutely disagree.
Yeah, I've seen the exact opposite. A lot of times that actually slows any use of lumber for quite a long time, right?
Well, if you think about it, where it came in when a hurricane comes, are you ready to start? I'll talk about that when you're ready to go.
Yeah, let's what do we got live here so far? I was just trying to bring something up and bring my feed up on LinkedIn, but it's not showing me. There we go. I'm signing into my LinkedIn just so I can answer these questions if I can. There we go. All right, Matt, we'll launch it live here. I don't see it up on the materials exchange page live, but it may just be a delay.
I can look and see.
Got it. Found it.
All right.
Okay.
Let's roll.
All right. Welcome to Lunch with Lumbermen. Matt Lehman, Lehman's Lumber Guide, Ashley Buckholt, Materials Exchange, the only digital marketplace. Hey, Matt, I was just on the phone with two people that just signed up to a lumber mill out of Canada, and they're part of your your group also. We're excited to have them on. So I would
Well,
say they're
ladies,
yeah, welcome and thank you. And we have some live spruce trucks of 104 and 5/8 listed, which are great into the Midwest. So Matt, interesting story. I guess we'll start out first of all, talk a little bit about what we're seeing. So we'll bring up the first thing about a hurricane here. Somebody thought that the market should be limit up due to that, but you were saying how you disagreed. I saw Kyle put something up here too. It's been my experience that those have longer term effects in the market instead of a shorter term effect, correct?
well, and if you think about with the location of where this storm came in, it didn't come into it came in a place where it's going to affect demand more than it is supply. If you think that there's no lumber mills in Central Florida, we're going to skip through out off of Jacksonville, come back into Charleston, South Carolina, scoot up towards Charlotte. So there's only just maybe a couple, 3 sawmills, Southern Pine sawmills, that are in the path of a tropical storm. But all the damage part, where the worst part of the storm was where there's no production. It was just it's going to stop job sites, so it's going to really affect demand more than it's going to affect supply. So that's going to really be bearish for the market because demand's going to get squashed.
Another thing, it's been my this is just me. So when a market is very in more of a bullish tone, negative things don't do anything to price, or sometimes the market keeps going up. I will argue that we're in a bearish market at this point. So anything like this, if it even has a sniff of being negative on demand, this shows to me with the market being down, we're kind of in a bear market at this point. I don't think we could probably argue that. I think we could argue that, but I think we're probably in a bear market at this point. I mean,
there's going to be, like Kyle said, it'll take a little time to assess the damage, and there'll be some structural damage. This category 4 or 5 storm is going to do some structural damage, so there will be some demand for lumber, but we're talking 6 months before the insurance companies even get out and start forking up money. So probably the earliest we're going to feel it is going to be the summer.
Yeah. But look at, I mean, some customers on here sent me over some pictures of the damage down there. So I hope everything is, we're thinking about everybody down there. Hope everything is good. It looks like they've got a pretty good response in place to get that. Now that storm is moving back on land a little bit and becoming more of a tropical storm. Does that sound right, Matt?
Yeah, it's supposed to get out to sea a little bit, and at the kind of worst case scenarios, come in a little south of Charleston as a category 1, and we here in Charlotte, we're on the track for it to be a tropical storm by tomorrow if it gets this far.
Gotcha.
So it's really going to come back in and hit Charleston, which is one of the hottest markets in the country right now for new construction. Also, so that's going to get all those places down there are going to get just buried in water, and job sites are going to be floating. So, Central Florida is kind of a hotbed too. So you take that whole section of the market out of play for a week, it's not going to be bullish for the market at all.
Let's talk a little bit about your layman's lumber guide. One of the people, Greg Riley, was asking me yesterday how some people are just starting to find out about your new pricing model that you're coming out with, and getting a bunch of people in the field to give you prices. How's that coming along so far, Matt?
Well, honestly, I'm a little disappointed in the number of people that want to participate in giving feedback. It's interesting. I had 8,000 views on a LinkedIn poll of regarding participation, or like, what do you think about the lumber market's going to be? And of those polls, when you get 8,000 people that look at it and 200 of them reply for a polling, it's almost like most people want to stay invisible. But I've been really, I can't think of a better word other than just disappointed by the number of people that don't want to give information, and rather complain about what they have and not offer any. I guess I got to just start paying people to give their opinion. That's what they're doing for me.
We'll stay positive. Some people are just starting to hear about it just now, so that's that's sometimes feedback doesn't come as fast as you want it to, but I think I thought that was interesting. Let's talk a little bit about the guide, and you wanted to go to page 2 real quick to show how you're doing something a little bit differently on momentum. Does that make sense, Matt?
Yeah, and that's I tweaked it after that. What you see on the upper right hand corner of that box there, where it's got the data points and momentum and the change since the previous week and the previous 2 weeks. And the purpose of that is just to first of all, just to identify just by price movement. You can see that Southern Yellow Pine has decreased $40. Spruce was down $20. Now this was at midweek, and dry fir was down 10. Green was up 10. OSB was no change. So that kind of shows you that it doesn't kind of show you, it does show you that the direction of each of those products and the momentum of it as well. And you can see the change in the percentage of momentum from week to week. That Southern Pine would be described as being in a downtrend. The direction would be down, and the momentum would be steady because the price change from week to week was minimal.
Matt, so it's just okay. That makes sense. I think I understood the way you just put that.
Well, actually, we could. I thought I had it updated for this week. We can talk more about it next week when it shows better. But the point I'm trying to get to is everybody is, for wherever you're located, your prices are going to be different sometimes. There's Southern Pine mills, for example, right now you'll see $50 a thousand difference from mills that are 100 miles apart on the same item. It's because they have it or don't have it. So I'm trying to get my guys to be thinking about the market as like, well, it's in a downtrend or an uptrend, and it's got stronger, or it's either accelerating momentum or decelerating, or it's just remaining steady, just so you can be prepared for what to look for next.
Let's go to the first page of your guide, and then when we go to the first page, there's a couple questions over here. Michael Breton, does that make sense? Hello, Matt. You stated in your guide that we were going into a chaotic period at the end of the year into next year. Do you believe that will put a damper on the home building market again? Hey, for the feedback you speak, maybe like me, still be stressed out taking care of business. So
yeah, I am.
Yeah.
I don't like to be put on the spot, Mike, like that. But yeah, I think I've been just kind of watching what people are doing and what it's saying right now, and the market is clearly not bought for November and December. If November and December are expected to be like the builders say that they're good for the end of the year. Dealers profess that they're underbought. They're bought through October. We're getting down to a place where everybody's expecting a buy to happen, but the people that are basically short lumber for November and December don't seem to be in any rush to go and do anything. It's almost like the market is expecting what the builders are saying is going to happen in January, going to fall off a cliff. They're expecting it's going to come earlier. So I think most people that I'm talking to, that my guys are saying that they'd rather be out or underprepared than be sitting with a bunch of wood coming into the year, because the builders are giving them nothing to hang on to. Builders are getting out of land deals and even getting out of land deals at losses. And to me, that's extremely bearish, because it takes a couple of years to get a land deal, in place to be able to build on it. And if they're just pitching their lots back, that's kind of a long-term negative scenario.
Hey, Matt, I think when you look at, I think we were talking yesterday with Riley about how is it new home sales and all that. It seems like we finally are starting to get through all these cancellations. At least there was a lot of them at first, right? So that's one thing. We do have rates approaching 7%. That's another thing, which is a little scary. Some of these rates are the highest they've been since 2002. I saw an article in the Journal yesterday. I think somebody made a comment how there's not much downside in these prices at this point. And because all the mills are bigger now and consolidated, they'll all curtail a lot easier. What's your thought on that?
Well, I'm very reluctant to step in front of the market and say it can't go to do something, because I've seen it in the last 10 years. We've seen it go to $150 from $400 or $500, and one thing, the mills are sitting on a lot of cash from over the last 2 years, and they don't. The last thing they want to do is start laying people off, and maybe they could send them home with paychecks. But I think production curtailments are going to come slower than we all expect they will, because the rational thinking is that they've been losing money, or they are losing money, but their duties are now basically cut in half. Their log supply is going to be down dramatically. I mean, the log costs are going to be down dramatically in the fourth quarter, so their break-even number is going to drop like a rock, just like prices are. So I'm not sure that, I don't know how much curtailment. It seems like mostly when we get curtailments, that they still lag demand just a little bit. But in long and short of it is, production, when a mill can't sell its production and has to curtail, that's not a bullish sign for the market. I don't remember or recall a market that rallied off of curtailments.
Well, certainly as the price falls and approaches, it's a lot. There is just by the law of mathematics, there's less risk at 400 than there was at 1500. So, but the whole question is people assess risk by volatility and ability. If you can buy wood and get it shipped to you in 2 weeks, and you don't need it for 2 weeks or 3 weeks, it's a different scenario than we were in 6 months ago or a year ago, where you just had to pay a price because you didn't know when you were going to get it. So I think it's almost like when you're a home buyer or a home seller, you can almost feel when the market turns and all of a sudden the buyers have the power instead of the sellers. And we're seeing it on the platform because more sellers are now coming on that historically didn't want to be on our platform, wanting to find more liquidity. And that's a long-term thing that takes a lot longer to play out than shorter, right? But I think the point of it being less risky as we drop makes absolute sense, right? But again, now in the South, there's actually production coming on and increasing because their costs are a lot lower, and they're doing very well. I shouldn't say very well. They're doing better down there because their costs are lower. Yeah,
still prices have dropped $200, but there's certainly more production coming on, so that's not going to be favorable for prices going up. And traditionally in the South, you don't see curtailments; they just kind of run through it. And we haven't really had an oversupply situation like we have the potential of right now either. But
exactly. We have a lot of people on today, Matt. So I think one of the things that I'm seeing is there's a lot of uncertainty in the market. And from the volatility we just went through, as the volatility drops, people still have business, right? I mean, multifamily still looks good. So is it Dewey Hennessy asked a question up here. If I got any thoughts on pricing January 2023?
Don't do it.
Yeah.
Yeah, that's I think, like you said before, the risk in this market is to the upside, because anything that's going to make prices go lower is going to make mills want to curtail, and anything that's any kind of disruption that disrupt supply is going to be bullish. And you're not going to get beat at $400 on 2x4s. You're not going to get beat on a job because somebody owns it at $200. So the cost of the material is not going to be the issue. It's just making sure if you don't want to have a lot of volume that you got to sit on. But it's not like you're just saying, if you owned a lot of it at $1,000 and it had a potential to go down to $500, that'd be scary. But when we're going to be, look, what's futures down? It was down at 405 this morning early, so we're almost in the 300s on the November futures contract. So that's a number that nobody can complain about.
Here's my thought on that question. With me being in an exchange that has no axe to grind on the buyer or the sell side, and I think people, if you have money in it and you're happy to cover it for January, then that's a whole different story, right, Matt? I mean, if somebody has money in it and they can get it covered, and you can take that risk and slide it over to somebody else. But what I will tell you is look for more people to push that risk off to. I don't think people know how many people are out there that are actually willing to take risk on from people. There's probably 20 or 30 of them out there that are willing to do that. And some of them do it. Some of them do it in different ways, but there's all different things between forward pricing, swaps, buy and hold. Matt, you and I have talked to people and actually helped them that have never been in the industry before buying stuff, actually open up facilities and and start putting wood on the ground that never did it before, and they manage it that way. So I think the one thing I'll say is use this as an opportunity to go out and find all the different ways that you can either take risk yourself or move risk on, or do a variety of all of them. Right.
Right. Yeah, it doesn't hurt to ask, because people are getting more, the harder business gets to come by, the more risk people are willing to take to secure some business. So I've talked to several multifamily suppliers that are, it's basically some of those jobs are getting double wholesaled. They've been bought from a broker that's typically does the servicing of the whole transaction, and they've sold it off to another broker. So it's interesting. It's almost the appetite for risk has gotten a little more.
Well, Mike and I are having conversations with people calling us so far down the chain now, are saying like, oh, I usually lock my prices in with this person, and we go and we Google that person. We're like, huh, never heard of them before. And then that person buys from another person who buys from another person who buys from another person. So you can see all that risk getting pushed down the chain and everybody clipping a coupon off that, right? So what we're talking is, in a couple ways to do that is, Matt has his group of people that he has his round table with every now and then. I suggest signing up for that when he has it, because people share a lot of the methods of doing things there. Come on to these shows and listen to them. Join Materials Exchange and do it. But I guess what we're trying to preach is just learning how to fish more than having other people fish for you.
Somebody asked me the other day what were my plans for the rest of my career, and I never thought about that a whole lot. But it's different now than it was when I was 25 years old. It was to make $1 and learn about the business. And now that I'm at the tail end of my career, my focus is more on education than it is on really getting the market right, or getting the forecast right. But there's so many people that are new into the lumber business that don't really know what the pecking order is, and how many that you can, if you're not careful with what you do, you can get yourself in a place where you pay so much you can get double wholesaled, or get so many people in the pipeline that when you got the price of lumber that's $400 versus $1,700, it's just for some multifamily guys, or particularly some large framers that are getting into the business of trying to be their own lumber distributors. There's a lot to learn. And I found the industry, our industry is really good about helping everybody along the way. But that means the more these people try to go direct, like multifamily builders or home builders trying to buy packages and put wood away, that cuts people out in the middle. I talked to a guy yesterday that has 5 multifamily projects scheduled for the first 3 months of next year, between now and the first 3 months of next year, and they're all bought and they're all put in a warehouse. And normally that lumber wouldn't be bought for another 2 or 3 months, but they've already bought it themselves and put it away. So there's a lot of wood that's bought for next year it's already covered. And so when the builders are telling you they're not going to do as much, and some of the multifamily guys have already covered a lot of they're going to do, that's even a little more bearish for doing like what is January going to look like? Typically the market rises between October and March. That's kind of your slam dunk period for the market to rise. And that probably will happen, but it's going to be based off a supply disruption, not a demand increase. It's just speculation.
Here's a comment. It said 3 months ago in the Montreal area, the guys who manufacture the trusses had an order file. I think that's what you're saying, into mid-November. Today it is still mid-November. That is scary.
Yeah, that's right.
Yeah. Yeah. And Kyle had a good point here. Lumber did this. I'm afraid to compare this to 2008 because lumber rolled over and continued to roll over for 2 or 3 years. But Kyle's point is lumber rolled over 6 months ago, so maybe we can theoretically see a bottom in Q4, and see what else is going on if the Fed creates a soft landing.
I think that's a very good more
point.
than a possibility, a good likelihood, because I think the builders are overreacting to when you start dumping land, that's like complete panic. And I think the builders are panicking and get a little overreacting, and we're not building a housing inventory. There's still a shortage of housing if you're in that camp. But I just think I think Kyle probably closer than anything else. We should expect the seasonal trend of the market to be rising in the winter, and I think there are a lot of people that are looking for a reason to buy lumber in late October, and that's probably as good as any, just because lumber will lead the way out, just like it's led the way down.
So let's just real quick, Matt. Just talking to your scouts and so forth. What are you seeing on the different species? I know what I'm seeing here is spruce is starting to really look for offers from about anywhere as futures peels off, but I don't think that's uncommon. Southern pine, little bit of bounce in 6-inch a couple weeks ago, but it doesn't seem to be a lot of follow through. 4-inch now was the strong one on pine. Are you starting to see that come off a little bit on the 4-inch side? And I'm also seeing
just look at the prices. Like 2x4s and 2x12s are $600. Everything else is $350, $400. So mills are just running 4-inch and 12-inch because it's the better return. And if you look at what pricing is doing, I think it's just a production shift where the mills are they're making the $600 lumber and not making the $400 lumber, and that's going to come into balance. But still, as long as the spreads are still there, $150 or so, we're probably going to still see more production in 2x4s and 2x12s, and there's less demand for 2x12s because EWP is back online. So it's a good time. Typically, a good time to buy 2x12s when they're cheap, but not at this kind of price, I don't think.
Here's a comment from a LinkedIn user. Matt, you should offer consulting for a fee. Listen to how the individual is procuring materials and offer insights and lessons learned to fit the individual business model. Speaking to the younger guys in the market, and he put in quotation, comment from earlier.
Yeah, I do that.
Yeah, I think in James, that makes perfect sense. It's a lot different getting feedback from somebody probably outside of who's trying to sell you or who you're trying to buy from sometimes, just to get a good incentive. So you have a toolbox or you have a benchmark, whether you're going to buy from them or not, still to go back and say, yes, but now that I know the methodology, can you price it at this or is it this? Does that make sense, Matt?
Yeah. Yep. I'll tell you that another thing I've seen lately too is there's from the wholesale perspective, that whole industry is beginning to embrace more of being helpers and teachers than just market scalpers. I think that whole section of the market is realizing that the days of, like when I first started, it was everybody's beating each other for an order within the house, and then now it just seems like there's more competition, especially some of the bigger guys. They're having to have more training and being more helpful rather than just trying to get an order.
Yeah, no doubt. And look, there's a lot of people, a lot of them that watch this show and are commenting have built these businesses off of consulting too, where they do a great job and they've got a lot of the information and they're smart and they have a lot of value to doing things, and you have to be to survive in this market and in any industry nowadays. So and a lot of people in the middle of the market have absorbed that and have become experts in being able to help facilitate a lot of those interesting types of transactions.
We've actually changed the name we reincorporated our company at the beginning of the year, and to emphasize the focus on education. We're not Layman's Lumber Guide anymore. It's Lumber Market Educators is actually the name of the company. And Layman's Lumber Guide's an entity underneath that. But for our members, we have classes. We call it the Lumber PhD class. And it just basically goes through and tells, and I certainly don't know everything there is to know about the lumber business, but I know enough to educate some people a little more than what they already are. But those classes go for a 6-week period. Then we have an inner circle that goes for a year. And usually those classes, those PhD classes, have about 25 people in them, and the inner circle has about 10 people in it. So we meet on a weekly basis and exchange ideas and information. We don't do talk about what you paid for price, what you paid for lumber. We certainly talk about direction and momentum and what you're seeing. And it's very helpful because it's got a good mix of builders and truss manufacturers, wood preservers, and home builders and framers and retail lumber yards, contractor yards. It's kind of cool when you see everybody else on the different aspects of the business, when they all get on the same page and in agreement. You can they really help each other out.
It's funny. It's funny, Matt. We have a lot of people. We're finding one of the biggest benefits sometimes, besides having a open, transparent digital platform. These shows like you and I do, or Mike does on Tuesday, or Greg, Matt, and I do on Wednesday. When we don't have them, I have all kinds of people I've never heard from before calling, wondering why we didn't have the show. I'm like, well, I didn't even know who you were. I never see you on our platform. People are craving information, right? And this is a way to bring them to them. So another person, John, asked a question here. The economy is a big ship to turn around. I think a Q4 bottom is optimistic. Yes, lumber leads the way in and out, but we have just been through 10 years plus of good times. It's going to take longer to turn back. John, look at I try to stay positive on these things, but I lived through the 2008 market, and sometimes things, I will arguably say over the last 2 years, things were much better than we expected by, I don't know how many X, right? And decisions off that. We certainly should be prepared for it, potentially to have an equal and opposite reaction to the other side. I don't create the monetary policy. I don't know anything, but I know that that's one thing that I can always be surprised by sometimes, right? Does that make sense, Matt?
Yeah, I think on another positive note too, I think we uncovered a potential of the American consumer that was a pent up demand of the desire to want to own a home and build a home and improve a home. And when it got down to a point when people were facing mortality versus building the deck, they chose building the deck to get what they wanted done. And I think it was kind of an eye-opening experience for everybody to realize that there's, we're basically the way that we're building homes, we're kind of doing it conservatively. The pace that we're building is conservatively. And I think there's more of a sense of urgency to experience life and get all you can out of it while you can. That's why right now we're seeing more people doing experiential vacations and going out to eat, doing things that are personal things rather than accumulating stuff. But I still think that when we get all through with this and get behind us, there's going to be a strong demand for housing, just because people want that sense of family, and people right now are even, that's why there's such a big boom in the build to rent market. People just don't want to be in an apartment. They want to get that feeling of being in a home, whether they rent it or own it or whatever the case is. They just want that more.
Matt, I'll tell you, that's where it feels different to me. Household formations and the people wanting to live in bigger house. At least I can tell you what it feels like in my little neck of the world. People want to move out of the city and live into a suburb where for 20 years it was the reverse exodus into the city and nobody wanted a house. Now everybody wants a house. I see an old house go for sale where my wife and I will look at it. We don't think anybody will buy it, and it gets multiple bids and moves. Good school district, good things. And our whole neighborhood has completely changed in the last 2 years. I mean, we don't even recognize it's wonderful because it's families moving around doing stuff. And I think that that's a trend that's going to continue too. So that could keep this demand underneath, which I think is maybe a little bit different than the 2008 market when we talk about that.
It'll be interesting to see also, because since 2008, you realize the household formation has begun with older ages, like over 30, people living at home longer. And I think we're going to probably see a shift away from that, where people trying to get out and get their life started at 25 years old instead of 30 years old or right out of college. When I got out of college, actually in my second year of college, my folks said, "You're done. Don't come home anymore. Go get a job."
Well, we see a different thing here now too. And I can only say what I see in my thing, where parents and grandparents are coming with the kids to look at the homes and putting big down payments down for them. As people retire, there's a lot more retirement money being pulled out of 401ks and the wealth effect, where parents are putting down bigger down payments. I don't know if I can quantify how many are. I'm sure somebody has, but some of these homes are being bought by money that parents are putting in for people. Not all of them, but some of them. So there's still an ability for some of these transactions to happen.
Yeah, they're going to find a way. I think because it's like when you get a taste, like the mills have gotten a taste of $1,500 too before. So it won't be long before we're back at $1,000 again, because that number's too easy to get to. And I think we discovered that $20 price increases can be replaced by $50 price increases in a week without a whole lot of argument. So I think looking forward again to go back what Dewey's saying about January. I think that this fourth quarter is going to be really chaotic, and we're going to have a lot of volatility from the aspect of directional changes, like we talked about going through this month of October. And we're going to, you look at Southern Pine, for example, and you see one item is up 40, one item is down 20, and it's like that all over the place. It's just confusion. But once we get something, the thing we talked about, interest rates at 7%, all of a sudden a 5% interest rate looks like a killer home run interest rate.
It totally does. Peter Flay was saying, have the builders passed along the decreases in lumber prices to the consumer? I have heard they have not. Any feedback on this? Here's my feedback. Builders only pass that along when they have to, right? Because lumber is part of a cost of doing a project, but labor hasn't improved at all, right? So I think when some people when a builder gives you an all-in price that includes lumber, labor, all types of things, I guess my answer is I don't know how the builders break that down. I think what we have noticed is builders now taking concessions. The difference between a contractor and a big production builder, some production builders have started taking concessions on prices to move houses. So indirectly, they are passing on some of that, right? But I don't think that the consumer looks at the lumber prices when they're buying a house to figure out if they're getting it passed on. No,
and I think some of those price concessions are also going to buy to rent people in block. I heard a subdivision last week that one of the largest builders in the country sold the entire subdivision to an investment company, and I guarantee you, for 250 homes, they probably got a better deal than you and I could get for going to get one at a time.
Well, think about it. They've just eliminated a whole bunch of paperwork and ease of getting that transaction done, right? And they can. But that's another interesting thing. Well, hey, Matt, we're getting up against our half an hour. So good chat today. Appreciate that. Make sure you sign up at Layman's Guide to get onto there. And as we talked about, Matt's doing more education now. It's a good thing to get in with him. Come to materialsexchange.com. Register. We'll get you online looking at all the prices real time. And we'll get you on to be buying and selling there. Mike put up www.laymansguide.com, where you can come in and you
can sign up for the scouting report on there too. That's absolutely free. No hitch. Once you do that, I'm going to ask you to take 2 months of the forecast for free too. So it just keeps getting better.
Yep. Sounds good. All right. Real good. I appreciate it, everybody. We're looking forward to doing it again next week. Everybody have a great weekend, and we'll talk soon.
Thanks for all your participation today too, guys.
All right, buddy. Bye.
See ya.